Thank you for that gracious introduction. I'd also like to introduce the two new members of our panel. Gregory Keough is our CEO of Mobile Financial Services and really does some interesting work at the intersection of MasterCard and Telefonica and has a background of more than 20 years in startups in the financial services space and that telecom view as well, which will be interesting to hear about. And then Michel Losembe is CEO of Banque Internationale pour l'Afrique au Congo. And what's so interesting is that he left a job, rising star within Citi, everything comes back to Citi as we're seeing today, to take on not a global view, but a very, very local view within the DRC. And so that is very, very interesting. And I have a lot of questions for both of you, but before we start, let me come back to you just for a point of definition. Right? So one of the things that's really interesting is we're talking about financial inclusion, and you've talked a lot about access. Now, those two things are not the same, are they? Can you talk a little bit about how we're defining our terms just so that we're all thinking about it the same way?
Well, I hope we're starting to think about them the same way or use them the same way, and I think this conference is a good opportunity to sort of set that up. But clearly, access is defined as the ability to use a service in terms of physical location and eligibility. So if you want to use the service, you can use it within a reasonable level of convenience, and you qualify. Whereas with inclusion, we're really looking at, from the point of view of having the kinds of benefits from financial inclusion that most of us enjoy today. So really helping us manage our day-to-day lives, as well as helping us meet the challenges of our major life milestones. And so for full inclusion, we want to see a range of financial services.
You know, one of the key takeaways, I think, for all of us from this conference is that financial inclusion is possible, that it's not a question of whether we will achieve full financial inclusion, but how. And so with that, Michel, I'd like to come to you to say, first of all, what does financial inclusion mean in such a very specific and challenging context like the DRC?
Financial inclusion for the DRC is, to say it short, is a kind of a survival of the country, if I can put it this way. Before traveling this morning, I was just called by the people from the branch of the Goma city in Congo, where the shells were falling not far from the bank, and asking me if they had to be opening accounts or closing the bank for the day. So financial inclusion is in my concept, the only way to come up with a more stable framework in an economy, whereby all the population would be included and participate to a more stable environment in which we can have a durable peace that takes place. So for Congo, the financial inclusion is a must, rather than being just a business.
So given those particular challenges, where do you start? If we assume that it's possible, what's the most important thing, whether that's in terms of the people that you focus on, the products that you offer, particular parts of the DRC? How do you start?
So the DRC has this particularity that only less than 5% of the population is connected to the financial system. So 95% of the population would be qualified as excluded from, financially excluded. So there's everything to be done. This is the nice part of it, because we can start from scratch at every level. So it starts eventually at the policy level and the regulation side. And there a lot of work has already been done. I think for the last decade, there's the authorities, the central bank and the government, and the partnership public sector, and also the donors are very conscious of that, and they're being pushed a lot of progress in terms of establishing the framework and the basics policies to enable financial institutions and banks and microfinance institutions to be able to deploy.
What are you saying in terms of that when it comes to mobile? We'll talk about this a little bit in terms of Africa, but more broadly, obviously technology holds tremendous potential. What are you saying?
It's interesting. I come from a background of startups and technology for like the last 20 years. So, and looking at the goal of financial inclusion 2020, I kind of maybe look at it a little different because I look at it as a startup. And so if I was to build a car, the first thing I would say is, okay, well, one, do people even want the car, right? So I think we know that one. Secondarily, are the pieces lying around that I could put the car together in a way that the people would like? And so the thing that I think is really fascinating about the opportunity here is I think there's 3 global themes, and they're all pushing in this direction. And so the first is just ubiquity of technology and access to information. That's generally through a cell phone, right? So you can go almost anywhere worldwide and you see use of the cell phones. And penetration, at least in Latin America, which I know a little bit about, is generally over 100%. And I could take you to the most remote place in Guatemala, for example, where you can see somebody who's still in their ethnic garb and who's also texting, so using technology. So that's one area. So that's a strong trend. The second is what I would say big data. So the ability to warehouse and have a granularity of data that never really existed before. So it's a very powerful, implement, and you can see it at the beginning, and we can see it in our lives. You go to Amazon, and initially when we bought on Amazon, we bought the book. But now when you buy the book, it says your buddies bought this book, or you may like this book. So we're starting to see the very beginning impacts of big data and its uses. And then I think lastly is the consumer and control. And this is a big one, I think, and it's because there's a fundamental shift in power to the consumer. And it's bigger every day, and you can see it on Twitter. Now, angry clients can immediately say, I didn't like that. And people are responding. And I think it took corporate America a while to realize the impact of this in social media, et cetera. So these factors are all pushing towards a different environment where we're going to live in. And I think that environment provides the impetus for financial inclusion because all those things line up very nicely. And so using mobile and financial products, there's the ability for the first time to deliver financial services in a way that's truly different, but more importantly, provides a very important benefit to the consumer. Because at the end of the day, if you're not zeroing in on a true consumer need and focusing on doing it a better way, it's difficult to get traction generally.
You hit on a really interesting point around mobile and the potential to have massive scale with mobile, which obviously is incredibly compelling for many of us. That said, scale needs to be customized to reach the specific needs of individual consumers, right? So we had talked at a previous session around the idea of bespoke scale. How do you balance the ability to reach millions or billions of people while also uniquely balancing the needs of specific populations that some of your research has highlighted? What are you seeing with that?
Yeah, no, there's definitely, if you look at all the mobile deployments, payment deployments worldwide, all of them have one traction point generally. So in Kenya, it was the transfer of funds between over distances, providing a very palpable benefit to the consumers. And I think, but when you look at it, if you step back and try to look at the entire issue and opportunity, and I'll give you a real example from Peru. So I was with a gentleman from Movistar in Peru. Movistar has about 67% market share locally in Peru. And we were discussing our plans, and he said, I've been trying, I have several people who work for me. I pay them, a driver, a gardener, et cetera. And I went and set up a bank account for them. I told him, from now on, I'm just going to put the money in the bank, and you get it from the bank, and then kind of that's the end. It's not my problem anymore. And so about 2 months into it, they all came back and said, wait, stop paying me like that. And he's like, well, why? He's like, I gave it to the bank. The bank said, you can get it whenever you want. They're like, no, there's fees associated with that. That just, I don't want to receive my funds that way. Please pay me, go back to cash. And so in that very real example, the bank is not at fault. The bank is doing their core duties, and their core products are geared to a certain group. This group is actually not a profitable group for them. So that's okay. There's a transaction between a person who is banked and a person who's unbanked, and there's friction there. And I think that if you look at the opportunity here, what I see is that really the friction, if you look at it, is in the cash. Cash is great if I need to pay you $2 right now and I give it to you, but when you're in London and I'm back in Miami, it's got to be electronic, right? And so I think that those factors and the digitization of cash is a huge opportunity, because if you look at it, that's the only business model. Coins have been around since about 600 BC, and they're still around, and it hasn't changed. And so I think the part of financial inclusion, the digitizing of cash, is going to be a very, very powerful part of the overall equation that benefits everybody in the ecosystem, the consumer, financial institutions, countries as a whole, et cetera. So.
Well, that's something that, of course, we know a lot about at Western Union, and we see the power of the intersection of cash and digital, and really the multiplier effect that happens when you have both. I'm wondering if you could talk about that in a very specific context, what you're seeing in terms of mobile. What's the possibility? Where is it living up to that possibility? I think we all have talked about the M-Pesa revolution quite a bit. Are there limits to that, or are you seeing it taking off in other places? What's been your experience?
No, we're very confident that mobile technology is the one who is going to make things happen differently in environments like DRC. Out of 65 million inhabitants today, the penetration rate for the mobile phone is about 20%. So I would say 15 million Congolese have access to the mobile. And the mobile coverage is more or less 62% of the geography of the country. So we have had several experiences there, and while I was at Citi, we worked together to put up the policy together to enable mobile companies to become financial intermediaries. And the experience has been good so far, essentially in areas where traditional banks could not reach or could not open bank counters. So the only limit we have now, and we discussed about the monetization of cash, because we use the mobile banking, for instance, to pay the soldiers that are fighting. We come back to the difficult security situation, or to population that are totally out of cities. So when they receive electronic money on their phone, one of the issues they have is, how do I monetize this? How do I buy services and goods with that? And this is where we found some limitation that can bring it to scale. So now we're trying, with the association with the more traditional commercial banks and with chambers of commerce, to try to build gradually a network around these mobile coverage areas to be able to deliver services that can be accessed by those who will accept to open a mobile banking account. But there's a very, very important and very sensitive progress that is achievable on that area. So today I would say that the mobile accounts, out of the 15 million phones circulating, is around 1,700,000 and something of the last statistics, and very strongly supported by the government, that we convinced as a banking association that I chair for the time being, to use as a way to bankerize the civil servants. DRC has more or less 1 million civil servants. We take from administrations, police, army, and all that, teachers. And that million, by the time we're able to convert them totally into the mobile banking solution, will represent, if you take the 3 million accounts that exist today, 1/3 increase in financial inclusion statistics. So this is something we're very proud of.
With good reason. With good reason.
So could I just say something about that? I mean, that is what when I mentioned step 2, this is the issue that I think needs more thought, which is that you can think of what the on-ramps, there are lots of on-ramps. So no-frills accounts are an on-ramp, mobile, signing up for M-Pesa is an on-ramp, G2P payments is an on-ramp, bill pay can be an on-ramp. But the question is, what do people do once they're on? And in many cases, they get on the ramp and then they don't do anything. Or nothing else is offered to them. And so this is where I think a lot of the thought needs to be happening right now. And one of the ways to look at that is by starting to use this big data that's coming in to look at what the use cases are. So this group of customer likes to use it this way, and this group uses it that way, and then build the business model around those use cases.
That's a great point. Do you want to take that?
Yeah, no, it's the key. So you can engage them, as you say, but if there's not a compelling reason to keep using this every day, I mean, people just aren't going to do it. It's just that simple. So I think, obviously, data helps us a lot on that, but I think we also have to stand back and understand a little bit about this consumer, because he's a little bit different. He tends not to trust you right away. So even if you can, and you can see it in transactions, right? So nobody comes in for the first time and says, I'm going to do a transaction for $100. They say, I'm going to do a transaction for $1, see if it works, maybe do it a couple times, and I start to develop a trusting relationship because, it's money, and it's a lot of money, and even if it's from a trusted, vehicle and source, it takes a little getting used to. I think then you can see an adoption into alternative products where there's more comfort. So you can see them starting with a simple transaction, and I've seen in previous lives with sending, for example, international top-up time from the U.S. Hispanic market to Latin America. You can see that start, but if you started with bill payment, for example, which is a much higher, cost item, also much more pain if it's not received. They cut off the electricity, et cetera. There's a transition to that product. It's not right away. If you started with that one for that specific market, it wouldn't go. But you could see when people started to engage, then they would start to do recurring patterns along that nature. But it's got to be it's got to go to the consumer, the consumer rules. And in this case, it's a different type of consumer, I think, that has very different needs, that while the basic raw materials is out there in the market, a lot of times it's just not put together in the way that fits those needs. And I think that's part of the trick, because I think that's the key. Because then it becomes an important part of the person's life, and quite frankly, they can't live without it. I mean, I'm sure there's many people from M-Pesa, if you said to them, well, what would you do now? I mean, do you want to go back to the way you used to send the money? My guess is no. I mean, there's a huge economic, security, and many other benefits in adopting the technology and process.
Well, and data really is key to understanding the consumer. There are lots of ways you can get at that consumer understanding, and I'm wondering if you could talk a little bit about how you understand your customers, and specifically where the data gaps exist, and what that means for your organization.
For instance, with a very low penetration rate, I try to guess my future customers rather than my customers. But we have, to make sure that we can go onto a very addressed strategy, it's a matter of getting the right information. In a country like Congo, where the last census was in 1984, you can imagine that we have a little bit of difficulties to reach there, and where in the country the GDP is totally imbalanced. In some regions you have 30% growth in GDP, in some others you have 2.5% growth in the GDP. So the data we have is a very difficult one. So we try to work on the last information received from the elections poll, that was a census that was done a couple of years ago, and that gives us some kind of a sense of where economic activity is taking place and which level of population is at which level of purchasing power. That would enable banks or microfinance organizations to orient their strategies of financial inclusion. And today, that's the challenge we have now, and we're trying to work with the various observers of the economy to be able to achieve that. So the World Bank and UNDP and these type of partners are very helpful in that, but we're not quite there yet.
So in terms of where we are with data, I actually want to follow up. It seems like we don't just need a map of the invisible market, but very dynamic maps of multiple invisible markets. What do you think is next? After this incredible piece of research, what's the next need?
Well, the first, I said how much I really like the Findex, because it gives you a customer's eye view that's consistent across countries. But so far, the Findex is 1 year. And so I'm going to be really excited when we have 2 years, because 2 years is a trend line, and then we could start seeing where, how fast are things advancing. So, I think we do need to deepen the knowledge that goes across countries, but we also need to deepen the knowledge in countries. And there are lots of really neat data development things going on. Mapping the locations, that's one of the things that's happening right now, is lots of efforts to detail map the locations of outlets. Well, that's great, but I think, soon the outlets, the physical outlets, aren't going to matter as much, and so there'll be additional information that will be needed. I think that what I mentioned before on use cases, it's proprietary information that people will not be able to share, but using data to understand use cases is going to be a really big driver of product design. So,
yeah. Brave new world. And looking at the time, I want to make sure that we have some comments from the audience. And actually, I first want to put someone on the spot. I know that we have Gabe Tata here, and want to make sure that we're hearing from the World Bank this view when you talk about the need for data and the data that exists. Obviously, so many of us go back to the World Bank so often. So we've heard about this goal of universal access by 2020. And so I don't know where Gabe is, but would you mind? Oh, perfect. Would you mind commenting briefly on the goal and how the World Bank sees achieving that goal?
Sure, thank you. So I think, firstly, the goal has to be seen in the context, at least for our organization, in terms of what we do, with regard to the broader objective of eliminating poverty and boosting shared prosperity. And as some of the data in the presentation shows, at least for the bottom 40%, that's going to be a key factor. Now, within that context, then, I think setting a target for financial inclusion is sort of a logical second step, in the sense that you're not going to get to poverty reduction and boosting shared prosperity without really focusing on financial inclusion. Now, the reason that we started out with a target for access, because there are sort of three parts to it, as has been discussed, is about access, usage, and quality. But we started with access because that is somewhat where the data is firm at the moment. And I think as we get better usage data over time, we can begin to think of where that goes. How will this play out? I think there are three sort of key parts to this. Firstly, global targets are good, but unless you have underlying country commitments and actions, you're not really going to get there. And so I think in this context, the work done by AFI, where 45 countries have now committed, as well as in the G20 context, I think this is something important. And from the perspective of our institution, the World Bank Group, which includes IFC as well, following into countries and working with them is, I think, the first step. The second step is about data. And I think there's been a fair amount of discussion around data, primarily on Findex, and earlier, I think, on the financial access survey that we do with the IMF as well, and CGAP. A couple of new things that we're working on. We've completed the first global survey on consumer protection for 114 countries. We are in the process of analyzing this data right now, and the report will come out shortly. And every 2 years, we put out a global payment system survey, which actually gives a lot of information. 2 years ago, when this was done, there was actually a specific annex looking on mobile payments and how this is developing globally. So I think data is an important area to be developed. And finally, I think a lot of the discussion here is around, what are the emerging business models, and what is the nature of the debate and the knowledge today. And in the next couple of months, we'll be putting out a global financial development report on financial inclusion, which is going to try and take a snapshot of where things are now. So I think overall, you're really looking at country-level action, data, and the development of further business models is where we see things going, and we are trying to do our share to support the global effort.
Right. Thank you.
Can I just make one other comment on data? One of the things, CGAP organized a really terrific with the IDB and the Association of Bank Superintendents of Latin America, a great session with regulators on consumer credit. And what the regulators were all saying is, because consumer credit doesn't go through commercial banks, we don't know how big it is. We don't know if it's a problem. We don't have the data to be able to even get anything to tell us whether or not this is an important trend or maybe even a bubble. And so I think that's an area, is that there's lots of transactions that are taking place that are on the credit side that are escaping anybody's attention.
And we see that a lot as well, the need to work with regulators to educate them on what's taking place within the business. I'm sure I see some head nodding. I'm sure we're not alone on that. But absolutely. And we were talking over lunch about the need for data to actually make the case that, in fact, certain bands, the vulnerable populations, are, in fact, marketable opportunities. So with that, we have time for just a couple of questions. Maybe we take about 3 and then answer them as a group. So I don't know if folks have questions. I see a hand in the back.
Hi, I'm Peter Goldstein from Intermedia. Elisabeth, you've put a lot of emphasis on looking not just at people who have accounts, but what they're doing with the accounts, their activity. And I think that's something that we always grapple with. We do a lot of research in this area in terms of what exactly is an active user. I think what you've described is, when you're looking at inclusion, it's a very multidimensional thing. You want to see people doing a variety of things, and I'm just wondering whether there needs to be an exploration of perhaps a more multidimensional way of looking at active use, and maybe that could be a new initiative. Thanks.
Okay. A couple more questions before we get to the answers. See a hand over there.
Susie Loney, Consult Hyperion. I absolutely agree with the panel that there are a number of difficulties to be overcome, whether it's getting the right customer proposition, whether it's overcoming unfriendly regulation. But something that hasn't really come up other than in passing is the role of the agent, that is to say the cash-in, cash-out entity. Elisabeth made a comment which I think in 10 years' time will be absolutely right, that their role will be less important. But right now I'm seeing mobile money anywhere that we're having trouble with it. One of the biggest issues is getting a good quality, reliable agent network. And I was just wondering what the panel's views were on how to make the business case effective and attractive to agents.
Okay. Question? Okay, so in terms of time, I think we'll stick with those two. Do you want to take the agent question first?
Sure. You're entirely right. So cash in, cash out is a big part of the puzzle, because if I want to send money from here to my mother who lives outside the city, both I have to way to get it into the system and digitize it, and she has to way to get it out and use it. So this is where we get to the granularity of countries, and how each country basically is very, very different. And so I'll throw out an example from Latin America, and I don't know, Michel, if you want to answer in your example as well from your country. But I think, for example, in Peru. So in Peru, we're focused very much in Peru. A couple things. There's an internal money transfer market, about $3.5 billion. There's a very robust POS network, about 60,000 or so terminals. There's a banking industry that exists that has correspondent agents. And so when we go and look at a market, we kind of have, I'm coming from a place where I'm running a joint venture between Telefonica Movistar and MasterCard, so I have some great raw materials on the table to start, which is very, very attractive. So we look at the way to put those things together in a way that makes sense. And I think a lot of that's from leveraging components that already exist in the marketplace. And that's part of, I think, the nice factor and the nice opportunity we have, at least in what we're doing, is that we have some of those raw materials right out of the gate. So we have a very broad agent network from Movistar. We have the ability to link a Movistar phone with a companion card from MasterCard that allows you to go and make purchases, as well as get money out of ATMs, and further build out, and by partnering with a bank as well, because we basically partner with all different people in the ecosystem. The bank also can give us access into their existing correspondent network. So it's really looking at, again, I think putting those pieces together in a way that makes sense for the market. And that's, I just throw that one out there as an example in Peru, because that's really an approach in Peru that's underway. But certainly that's different than the approach might be in Michel's country or Kenya or other countries, right? It kind of depends on where the physical location is that you're starting.
Yeah, in Congo, as I said, we have a full challenge of moving the money around, and it's a very physical challenge, because sometimes you have to charter planes and bring banknotes around to make sure that you can deliver the cash through cash points. So what we've been, of course, we've been working a lot with money business services like Western Union domestically, okay, and other companies of the kind that are moving and are clearing cash from cities to cities, and we're trying to hook up on those networks to connect with the financial services and the mobile banking services as well. So it's a real challenge on a country that's as large like Western Europe, and no, it's yet a big challenge for us as well. And we don't have the POS network that was mentioned for Peru. Yeah.
Perfect. Well, I know that we need to wrap up, and so I know there is definitely a need for a greater multidimensional definition of access. We're hearing that. We're seeing that data can help improve quality by getting different types of agents involved. Let me just ask each of you, if I could, put you on the spot with one word. What is the thing that we most need to do to move this forward? So, final thought?
I think to choose the example of Congo to come to this forum is very speaking by itself, because it's one of the last black holes of the financial system, because there's none per se. Yeah. And the construction of that financial system will go from the bottom, and that bottom will at the same time mean financial inclusion. So as the last word, I would say that we must have some kind of a support on the regulators and government side to make that a policy and a priority. And also, since we have a lot of donors in the room, to see where on the support on the private side of those interested in investing in that sector in DRC is pretty much important.
Regulation and investment.
Exactly.
Final thought?
I would just say integration of the components that already exist that allow us to take action immediately and deliver a consumer value proposition that resonates with the consumer.
Great. Final thought?
Well, just I'll just respond on the data question. My
Sure.
final thought is just that we do need not just banking the unbanked as a measure. We need multi-dimensions, and they should be demand-side focused.
Great. Well, to be continued. Thank you all very much, and thank you for hosting us.
Thank you.
Thank you, Michel.